Hey everyone, PSK2329. I wanted to do a quick video to talk about what my thoughts are on the week coming ahead. So tomorrow is going to be Monday, October 15th, and we just saw the big sell-off in the market just like we did back in February. And you can see, I mean, we just had 1, 2, 3, 4, 5, 6, 7, 8 days of pretty much straight selling. You had a little consolidation in here, but the rest has been pure selling. I mean, you can even just look at the volume. These are probably 2 or 3 of the biggest volume days we've had since that February sell-off. And I just wanted to kind of speak about a couple things that I've been reading and thinking about over the weekend. And, you know, I know that on Friday, you can see I have a daily, hourly, and then a 10-minute chart set up here on TradingView. You can see that Friday into the close, we had this descending, pretty much a descending wedge. You know, you had this downtrend with the base here, and I was truly looking for it to keep going and actually flush out, test a double bottom here, bounce, and then continue selling off. Obviously, the bulls said, no, we're not going to let that happen. We're going to squeeze this a little bit into close. And that's a very bullish sign, and that's great to see, considering that, you know, going into Friday, the fear and greed index was down to 5. I mean, that is low. I mean, when you look at what the fear and greed index is made up of, when it starts talking about junk bonds, market volatility, the momentum, where people put their money when they want to go safe, you know, the put to call ratios. I mean, look at it. They all say extreme fear, extreme fear, extreme fear, extreme fear. That's not a good thing. Plus, if you look at the fear and greed over time, you look at the past 2 years, anytime we've gotten below 20, you see a big bounce. And we see, you know, even here it kind of had a choppy zone. This is back in February, and I think this was like May. And then we bounced. And now here we are at, I mean, 5, I think, was the lowest point it's been in 2 years. It's unbelievable. And then, you know, after Friday, now we're still sitting at 11. So still a lot of fear out there. And I have a feeling that even though this is, you know, it's a hammer, it's a technically like a reversal candle, I would have actually liked to have seen that down here below this candle, because when I'm looking at this, I'm looking at, okay, it's inside here and it's inside here. So technically this is just an inside day, even though it is a bullish candle. You know, a hammer, it's still what we consider an inside day. It's still inside this previous day candle. Now, I'm thinking that what could happen, and this is just a couple scenarios, is, so this white line is the 200 moving average. And the reason that some of these are important, these moving averages, is because you got to think about, so much trading is done on these algorithms now, and they are as good as the people that programmed them. So they're going to be very technical based. So anytime an algorithm sees a stock trading below the 200 SMA, that's a very bearish sign. It's going to want to start to unload, because that is, you know, anytime you cross the 200-day moving average, that's an extremely bearish sign for the stock. As long as it stays above it, that's still a bullish stock. And the same thing with the 50 and the 100. I'm testing the 150 to see if that has any influence, but so far I've noticed that the 50 and the 200 are probably the best two to go by. But I'm looking at this as kind of more like an inside day. It's not really a reversal. It could be just a quick bounce. So I'm just thinking either Monday or Tuesday we might bounce back up to here or so, maybe this 280 level. But I don't think we're going to see the big move, the big bounce we saw in February, where we have this huge day, because that should have been either Thursday or Friday. I'm looking more for like this type of thing that we had back in April. I wouldn't be surprised if we just trade in a range between here and here, just like this did for a few days, maybe even a couple weeks, until the midterms are over in November. You know, you got to figure we're almost halfway through October. So I think we have a couple of weeks of this. I wouldn't be surprised if we just trade in a range between, say, this 280 and this 270 range. You know, where we just kind of see up and down, up and down, up and down as we consolidate more towards this downtrend. I'm going to be really curious to see towards the end of the week what happens with this downtrend, because the reason I'm still kind of neutral on the market, I do think we're going to get a little bounce just because some of these stocks are so cheap. Some they just, you know, they might want to get bought up, just played into earnings. You know, you have Netflix has earnings on Tuesday. Then the following week we start getting into the rest of the FANG. I might see a bounce, but I'm not thinking before the midterm elections that we're going to be moving back to test new highs. I think we're just going to be kind of range bound. And a couple of things that told me this were, if you pull up if you saw my tweet on Friday about the options flow, let me show you my feed. Where was it? Right here. If you look at all the option flow, all the big options for Friday were mainly banks, you know, and some oil stuff. But, you know, you had some people buying the healthcare ETF. You had some people buying, you know, you had some Vegas stuff. You know, LVS is casino, Penn, that's gaming. You know, it looks like they were nibbling some of that stuff. But I mean, you're not seeing Apple, Netflix, Amazon. You know, those stocks have led the market the entire year. I mean, they make up those 30% of the stocks make up 70% of the move that we've seen this year. So when I'm not seeing the option flow coming into Netflix and Amazon and Apple and all that stuff, why they're beat down on this big sell-off, that tells me no big money is stepping in to go higher. I mean, they're not even buying some of the other stuff you'd see. You know, right now they're talking about, okay, was this a move between growth and value? So what that means is, you know, you have your growth stocks, your newer growing stocks like Netflix. Did funds rotate out of that into more value stocks, things that have a good solid PE ratio, probably a lower PE ratio, but have a good high yield dividend? You know, stocks that companies that have been trading around for years, that are just solid companies that they can rely on until the market figures out what it wants to do. Then maybe they can get back into these growth stocks. Because if this truly was due to what they said, the rising treasury yields, this big sell-off and the risk of future earnings being lower on margins, then this was just a lot of profit taking. Now, I think there was a ton of things that came into this sell-off. I think it was, you know, October is the most volatile month of the year. Every year, you have a lot of rotation going on as far as seasonal cycles. You have some option cycles that come in this time of year. I mean, there's a lot of things that go into this. And one of the things I use is not only this Fear and Greed Index, but I'm also using Market Watch. I enjoy this website because they give you a lot of good articles about the market. But I can watch, if I just click on rates, I can watch the treasury rates. And you can see kind of over the past, let's look at the past 5 days. Actually, let's kind of look at the past month, what they were talking about. So you can see October 1st, this is when the rates started to really rise, and you can see it actually started in September, but they really started to spike up, and then they were saying, okay, this is what the fear is, this is why the market started selling off. Now, I'm not always a believer that it's one thing. You know, I think sometimes if you watch CNBC that they're going to, whatever happens that day and the news is that day, they're just going to say that that's why the market did what it's did, even though it may have absolutely nothing to do with it. But then I also track the futures, and right now the futures are down. And I know that Trump was just on 60 Minutes. I didn't watch it. I just kind of actually just looked through the highlights here. There wasn't anything that was new to me. It was all the same old stuff, in my opinion. But you know, futures are down, so looks like we might be gapping down in the morning. So if we gap down an open week, you know, that's going to be kind of a bearish sign unless it holds support. It may want to just test maybe even Friday's lows down to 272. I mean, I doubt, I mean, I'd be really surprised if it got that low, but you know, maybe it does want to test it and then we'll bounce on Tuesday or something. I don't know. But the other thing too is I do a lot of reading throughout the week and throughout the weekend. And I subscribe to Barron's, and I really enjoy Barron's because it's all market related stuff, and it's really cheap. It's not an expensive thing to be part of, but you can every day I'll just read some of the articles, and there's always you know, they're always giving you good information, and kind of there's obviously some smart people that write this stuff that are either fund managers or traders or you know, they're in tune, they're economists, whatever, they're in tune with what's going on. So you know, I'll read these every single day, and I'll just kind of read the highlights from the day and figure out kind of what they're thinking and what they're saying, you know, because I haven't been doing this long enough to know everything, and I don't think I ever will, but you know, it's good to kind of get an understanding of what else is going on or what else people are talking about, because I'm not the only one that reads this thing. Same with Market Watch, you know, they're kind of stuck talking about the same thing. You know, I'm looking at some of these articles going, okay, what are they saying here? And then what are they saying over here? And then what am I seeing on Twitter? And then does that match up with the technicals? You know, just to try to build my thesis. If you watch my last video, I always talk about that, building a thesis with a stock. And if I'm looking at the SPY and I'm trying to build my thesis, I'm saying, okay, we had massive volume. I mean, just kind of, I wouldn't say record-setting volume, but I mean, we had the biggest volume days since we had that huge sell-off there. And what was the big contributor to the sell-off in February was the VIX. Okay, so what's going on with the VIX? Let's take a look at that. So the VIX, again, the VIX has massive volume. I mean, there was a lot of buying going on in the VIX. Not nearly as much as it was in February when we had the big pullback, but I mean, enough to see where we had you know, this move back in July when they were buying into it in July. So something tells me that the downside may not be over. Do I think we're going to see another leg down like this? Probably not, but I have a feeling that there's still going to be some more unwinding going on with funds and portfolio managers to kind of take some of their exposure off the market, because they may be fearful of what happens to midterms. And then I'm going to be continuing to watch the flow, the option flow, because I want to see when they step in and start buying stuff. Now, if I had to bet any kind of money right now, I would almost bet that we're going to start seeing it like right at the midterm elections. I wouldn't be surprised if they start buying it the day before or the day of. We're coming into the elections, and then they just start, you know, you just start seeing bullets coming in left and right, just people buying huge chunks, putting all their money back to work. Because what's going to happen is, if we do have another leg down, this stuff is going to be trading at such a low PE compared to what it was a year ago, but the fundamentals of the companies really haven't changed. Is there a potential that their profit margins could be lower going into the next quarter or even the next year? Yes, absolutely. But the tariffs aren't going to impact everybody. They are going to impact certain sectors. But the tax credits will have taken place by then. So, you know, technically that could be coming off the balance sheets. You have other things that could go into play to reduce margins. But, you know, I mean, based on what we've seen the previous 3 quarters, companies have been crushing it as far as earnings goes. So that's why I'm really curious to see what the guidance is like in Q3 or this earnings cycle, because I want to know, are people going to be lowering guidance? Are they going to be keeping it in line? And then if they're just keeping it in line, you know, who knows what could happen next earnings season. We may see people missing left and right. I don't know. We'll see. But these are still really strong companies. The economy is doing really well. So I have a feeling we're probably just going to bounce around. And then I want to see what happens when we retest this downtrend. If we actually break through to the upside, or if we just continue with our next leg down. And again, I think it's just going to be choppy until the midterms. So I'm probably going to be playing less and less options and back to more equity, you know, like 90% equity. And just keeping my size smaller and locking in profits quickly. I'm not going to be riding things for the day or, you know, for a swing. It's going to be a lot of profit taking on my end. But that's kind of my thoughts on the market and what I'm thinking and kind of what I'm seeing. If we close below this 200 again, I mean, we'll see if the bulls step back in and push us back above, or if we do get our next leg down. I do think we'll see a choppy week. I do think we're going to see some bouncing around for the week. And then it'd be really curious to see what happens with earnings, because a lot of the flow that you did see on my Twitter feed was a lot of regional and national banks, and those are all reporting this week. So we'll see what's going to happen. I mean, the XLF has just been dog poop. I mean, this is the finance ETF for the S&P. I mean, just look at this thing. This thing has just been garbage. I mean, to me, the banks have been doing they've had a great year, in my opinion, because they've had tax cuts, the economy's doing well, they had buybacks approved. I mean, other than some of the global economic things going on, which is, I think, why it's kind of held this market down. But if you compare it to any other sector, you know, if you look at technology, look at this, straight up. If you look at healthcare, which has been actually just killing it. I mean, look at this, just straight up. Let's see, even if you look at building materials, you know, it kind of looks like the financials, you know, the materials sector has been getting crushed. Let's see, what else? Look at consumer staples. I mean, even, you know, they've had a nice bounce since May. You know, they had a good bounce back. Let's look at consumer discretionary. You know, I think this one's kind of been the shocker. I don't think people thought consumer discretionary would have such a good year, but they have. And then we have the new one, the XLC, which is the communications. That's kind of just been getting sold off since it opened. You really couldn't, I don't think we could really buy into it until September 21st, I think was when we could initially get in it. But I mean, just the financials, I'm going to be watching this to see. I mean, look at it just sell off. I'll be watching this to see after earnings if this thing just continues to sell off more, or if it actually can stabilize and to start to grind higher. But as far as the overall market, like I said, I think we're still in for some chop. I think it's going to be until the elections. I think it's going to be kind of up and down. I think funds are still going to be selling. I don't think they're going to be selling at this kind of pace. I think that they'll gradually do it, which means that you buy the dips and sell the rips, because they're probably going to be doing the same thing. They're going to be selling into any of these big pushes. And yeah, that's kind of my thoughts for the week. So if you guys have any questions, feel free to reach out, and I hope that kind of helps you set up for the week, and also give you a couple things I look at. So like I said, I follow this fear and greed index every day, because the one thing I am looking for is to see if we do get some buying, and I do see some sweepers coming into some of the more popular names, then we could just see a squeeze. Because if the market is overly bearish, they'll just squeeze them for the day. It doesn't mean that we're going to keep going higher, but they could definitely squeeze the crap out of them. And that could be a good, nice, fun day where we get one of these big candles, a ton of range. And then one of those days is the days I'm going to want to capitalize on. But that's why I'm going to have the SPY. I always have the SPY open up. I always have, especially when we're in downtrends like this, I always have the VIX open so I can watch that, because if money's coming into that and that keeps pushing, then the rest of the market's going to sell off. So I'll be watching this as well to see if money keeps coming into this. Now it does look like it's kind of topping, but we'll see. It could just be consolidating and actually creating a huge flag and then just right back up and the market sells off. So it'd be interesting to see if we sell off the last week of the month. But again, I think earnings is going to have a lot to do with that. What happens? Do some of these get bought up into earnings, which pushes us higher, and then they just sell off after earnings? Or does more buying come in after earnings and, you know, kind of pushes back up? We'll see. And like I said, I think a lot of it's going to have to do with the guidance. So I'm going to be paying extra close attention to guidance this time, just to see if they're saying margins are going to be reduced, you know, they're going to be reducing some of their guidance and things like that. We'll see. So hope everybody has a great night, and good luck in the markets.